Hi guys, so I promised you guys I was going to give you a USDJPY hack. This hack is something that I always use when I'm trading USDJPY, and it's very effective. And first of all, I would like to say that I'm going to show you a strategy for swing traders, and I'm going to show you a strategy for scalpers, so both parties can benefit. So without wasting much time, let's get right to it. Now, as you can see, I sent this straight to I was showing my Telegram community. Look at the trade I took and why did I take this trade. I know many of you are already guessing, but before we start guessing why, let me just show you the overall picture. Now, USDJPY has been doing something for the last 1 year, and it's not just the last 1 year, it's always like this. USDJPY is always like this. Whenever it falls, if you look at this area, whenever USDJPY falls like this, what happens? It always continues back whenever there's a 70% to 90% fall, right? In the last 1 year, it always goes back. You can see here, you can also see here. So whenever it falls, like 70% fall or 90% fall or 80% fall, it always goes back up. Now this is something that has been happening like from when Seth. Let me zoom out, you can see. You see it's still happening, it's still happening, it's still happening. Like USDJPY is just on a very, it's like an everlasting bull run, right? And for the swing traders, you can just open an account, have USDJPY and start buying it, because it's in an upward movement, it's trending. If you have a lot of capital, let's say you're someone like Don Jazzy now, you have a lot of trading capital, you can just buy and be dollar cost, like you just be doing dollar cost average, like just be buying. When it falls, you buy more, it goes back up. If it falls again, you buy more. And for a swing trader, this is a safe haven. It's just like buying a plot of land and saying it will appreciate. You can just be buying USDJPY and it's going to be appreciating for you. Now for the scalpers, how did I get this entry? Now the first thing I know is that whenever it falls 70 to 90%, it's going to go back up. It did it here, it did it here, and I believe it's going to do it here again. Now what is the reason for all these major falls that we are seeing here? Like, why is it falling so much? The reason that it's falling so much is just news. I think at this point, the US and the Japanese, they were trying to reach an agreement that was going to help the yen, because the yen is weak. The yen is basically in crisis. So they were trying to make some policies and amendments that were going to help the yen. That's why you can see that the USDJPY started to fall. Right now, let's go to the technicals. I'm on the daily time frame. I just used the daily time frame to show you what I wanted to show you. So let me go to the 1 hour, for example. Now we already know that when it falls 70 to 90% of the time, it's going to go back up. Now what we need to know is our entry. As you can see, it's very important to pay attention to levels. Now price has been going down, right? If you don't know if it has fallen to 70% or 80%, you might be asking, how will I know? You can use your Fibonacci. I talked about Fibonacci in another video. I'm going to even do another one because people said I should explain it again with more videos. So I'm going to do another video. So you can use your Fibonacci levels to know how many percent retracement it has done, right? Once it has done 70 to 90, you can start buying. If you see here, this was the last lower high. And we have another one. As you can see, price is just going, like, it's not going below these levels. Price is not going below these levels. As you can see, this is already an indication to me that, okay, price does not want to go down. It wants to start going up, right? And then we have this counter trend line. We already know that price is trending upwards, right? Already on the lower time frame. But now we have this counter trend line here that is now here convincing people that price is selling. People sold here, price came back, they sold here, price came back, they sold here, price is falling, and they are also going to want to sell here. Now they've become the liquidity trap, right? And remember the video that I taught on TikTok. There's a video that I taught. The video has over 40,000 views, where I was talking about the liquidity trap. When price has 1, 2, 3 touches, that trend line is already an obvious liquidity. You don't want to be using a trend line that has too many touches, right? You want to be using a trend line that has just what, 1, 2. But once a trend line has more than 2 touches, it's having 3, 4, that trend line becomes very dangerous, and that's not the kind of trend line that you want to use. So me, I already saw this as a liquidity trap. Now I already know that price is going to go up, and this that is happening here is just a liquidity trap, like I said. So having said that, now having noticed that, the next thing I want to do is go to even the lower time frames. Let me even go to the 30-minute time frame, for example. Now when I go to the 30-minute time frame, I want to combine this with something like a breakout, right? There are two ways. Like the old me, I will enter from here, but with experience, I don't need to wait for here most times. I don't need to wait for price to come here before I buy. From here already, I was already predicting the buy, and I know that USDJPY is very volatile, so I wanted to put my stop loss in a safe place. Initially, I wanted to put my stop loss here, but then I was like, this is going to be a bigger risk to reward ratio, almost a 1:5, but it's better to be safe than sorry. So I just put it here, gave it breathing room in case it wanted to come back down. Now, if you remember this, what can I use to describe this for you? ICC, for example, where you have something like this, where price is going up, and price breaks this other level. You want to wait for price to come back down, and as soon as price starts to go back up, you want to buy, and price is going to continue, right? So this is what the ICC model is. So this is the sort of entry that you want to use in combination with the other things. You want to use this kind of entry. Now you already have a confluence that there's a counter trend line that is already providing liquidity for the market, right? You already have that at the back of your mind. So you have a bias to buy, because USD JPY, like I said, is in an everlasting uptrend. So whenever it falls, it's just an opportunity to buy. That's one confluence. Number two, the trend line liquidity that you're seeing here, is another reason for me, because I know that this is a trap. And then this entry model that's forming here is another reason to enter. Like I said, I entered here because of experience, right? So that's the hack that I wanted to give you on USDJPY. Whenever USDJPY falls, let me go back to the daily time frame so that I can explain to you guys better. You can always use your Fibonacci when there is a big fall only. I'm not saying when it falls a little bit you rush and go and be buying. No, when there's a big fall, you can use your Fibonacci. Like here we had a big fall, so where is the last big move? You can draw your Fibonacci from. If you don't know how to draw Fibonacci, go and watch my other video, because I'm not teaching Fibonacci in this one. I'm just showing you. This is your Fibonacci, right? Why is this thing deleting? This is your Fibonacci. Now, according to the Fibonacci, you can buy from here, right? You can buy from here. This is our entry. If we're using Fibonacci, you can buy from here. So this is a confluence for me to buy. Another extra confluences. The more confluence that you can get, the better for you, right? If you even look here, you'll see the same thing again. Fibonacci works, guys. If I draw my Fibonacci from here, I draw it to this level here. As you can see, the blue line is going to be our entry, which means that we can buy from here, and then we can place our stop loss below here. And you see how the Fibonacci works. This is a daily time frame where this can be your take profits, this can be your take profits, this can be your take profit, here can be your. So the Fibonacci gives us different take profit levels. Depends on your risk appetite. Do you want to hold for a long time, or do you just want to be in and out? So guys, that's the hack I wanted to give you guys on USD JPY. if you enjoyed this video, please subscribe, share, like, drop a comment. That's the only way you can encourage me to keep doing this, and I can teach you guys more things. There are a lot of things in forex that you will just feel like, it's not a big deal, but when I break it down like this, you will just be having different ways, and you see the market differently. You have different ways to enter and exit a trade, right? So see you in the next video, guys.